On June 12, 2026, a company that builds rockets became worth more than $2 trillion in a single afternoon. Investors lined up to hand it $75 billion. And in return, they were given almost no power at all. This is the story of the largest IPO in history, and the strange bargain at the center of it, the $2 trillion bet on one man. To understand why this IPO mattered, you have to understand what SpaceX actually is in 2026. It's not just a rocket company, it's three businesses stacked into one. There's the launch business, the rockets that put things into orbit cheaper than anyone else. There's Starlink, a global internet network beamed down from thousands of satellites. And there's the newest ambition, orbital data centers, computing power in space, aimed squarely at the AI boom. In 2025, the company brought in somewhere around $18 to $19 billion in revenue, with Starlink as the biggest engine. For years, it stayed private, available only to venture capitalists and insiders. Then, in the spring of 2026, that changed. SpaceX decided to go public, and the moment it did, the financial world lost its composure. To understand why this IPO mattered, you have to understand what SpaceX actually is in 2026. It's not just a rocket company, it's three businesses stacked into one. There's the launch business, the rockets that put things into orbit cheaper than anyone else. There's Starlink, a global internet network beamed down from thousands of satellites. And there's the newest ambition, orbital data centers, computing power in space, aimed squarely at the AI boom. In 2025, the company brought in somewhere around $18 to $19 billion in revenue, with Starlink as the biggest engine. For years, it stayed private, available only to venture capitalists and insiders. Then, in the spring of 2026, that changed. SpaceX decided to go public, and the moment it did, the financial world lost its composure. Here's where the story gets strange. The company set out to raise $75 billion, selling about 555 million shares at $135 each. That alone would make it the biggest IPO ever recorded. But the demand that came back was on another level. According to people familiar with the order book, total orders climbed past $250 billion, more than 3 times the size of the deal. Reportedly, the institutional side alone was approaching 4 times oversubscribed. Retail investors, ordinary people, were said to have placed over $70 billion in orders on their own. Roughly 1,000 institutions reportedly lined up. SpaceX executives met around 300 of them in person. Everyone, it seemed, wanted in. Why? Because investors weren't buying a rocket company. They were buying a story. The belief that this was their one chance to get in early on the next Amazon, the next Tesla, a platform that might own launch, own global internet, and own a piece of the AI future all at once. The fear of missing that was worth more than any spreadsheet. On June 12th, the stock opened around $150. By the close, it hit $160.95, a 19% jump in a day. That pushed SpaceX to a valuation of roughly $2.1 trillion. Now, hold that number against reality. At $2.1 trillion, the company was trading at around 112 times its revenue. To put that in plain terms, investors were paying more than $100 for every single dollar the company earns in a year. Even by the standards of high-flying tech stocks, that is extreme. And here's a detail most people missed. Just weeks earlier, SpaceX had quietly lowered its target from above $2 trillion down to at least $1.8, after some sophisticated investors pushed back. Even in a frenzy, some of the smartest money in the room thought the highest numbers were too high. But the real story isn't the money. It's what investors didn't get for it. When you buy stock in most companies, you buy a piece of control, a vote. At SpaceX, that's mostly an illusion. The company uses a dual-class share structure. The shares the public bought carry 1 vote each. The shares Elon Musk holds carry 10 votes each. The result: Musk controls roughly 85% of the voting power, while owning a far smaller slice of the actual company. He is, at the same time, the chief executive, the chief technology officer, and the chairman of the board. He effectively chooses the directors who are supposed to oversee him. It goes further. SpaceX incorporated in Texas. Its charter doesn't promise a majority independent board, and disputes are pushed into private arbitration instead of open court, which governance experts say makes it far harder for shareholders to ever hold management accountable. A Harvard corporate governance analysis put it bluntly, calling it a top IPO with weak governance, noting that Musk can sell down his economic stake and still never lose control. One law professor said public shareholders would have very little ability to influence the company at all. So this was the bargain. Hand over $75 billion, and in return, trust one man almost completely. So which is it? A generational opportunity or a bubble wrapped around a single person? The bull case is real. SpaceX dominates launch. Starlink is growing fast. The move into orbital computing aims straight at the most valuable trend of the decade. Wall Street analysts who initiated coverage set price targets well above the IPO price, some implying the company could be worth $2.5 trillion within a year or two. And Musk has a track record of turning low-odds bets into dominant franchises. Paying up, the bulls argue, is just the price of riding the next 20 years. The bear case is just as real: an extreme valuation, governance that gives investors almost no protection, and a company so dependent on one person that his health, his focus, or his reputation could move everything, with no one able to step in. Here's what this moment actually teaches about money and power. In markets, we like to believe that price reflects value, that the numbers are rational. But the SpaceX IPO is a reminder that price often reflects belief. Belief in a story, belief in a founder. And when belief runs hot enough, investors will pay almost any price and give up almost any right to be part of it. That's the real trade that happened on June 12th. Not shares for dollars, power for faith. The market didn't just value a company. It made a bet on a single human being and willingly handed him the keys. Whether that's the smartest bet of the decade or the moment the music played its loudest, we'll only know in hindsight. If you want to understand how money and power really move the world, the deals, the founders, the forces behind the headlines, subscribe. We break down one story like this every week because the people who understand the game are the ones who get to play it.